All right, let's get right into it. There is a massive battle raging in the Bitcoin market right now. It is a classic tug of war, with the price just teetering on a knife's edge.
So, after a pretty brutal 25% price crash, Bitcoin's trying to claw its way back. But the big question on everyone's mind, probably your mind too, is this. Is this comeback for real, or is this just the calm before an even bigger storm? You can see it right here. After smashing that all-time high back in November, the price just fell off a cliff, a 25% drop. But since then, it's been fighting back. And it's this whiplash, this V-shaped action that has the market completely split down the middle.
Okay, so first, let's dig into the bear case. Let's talk about the powerful forces that are trying to drag the price down. There's a lot of fear out there. And you know what? It's not just random panic. There are some very real things to be worried about.
We're going to unpack three big ones. First, you've got central banks getting ready to tighten the money supply. Then there's this huge shadow looming over the market from one single company, MicroStrategy. And on top of that, a lot of very smart, very experienced traders are sounding the alarm. Let's talk about MicroStrategy for a second. Their stock has gotten hammered. It's down 60%. That's way more than Bitcoin's 25% drop. And this is a huge deal, because the company's CEO has basically admitted that if their stock keeps falling, they might be forced to sell some of their Bitcoin. That's got a lot of people on edge.
And here is why everyone is so nervous. MicroStrategy owns a staggering 3% of all Bitcoin that will ever exist. 3%! Think about that. If they are forced to unload even a little bit of that, it could send shockwaves through the entire market.
Veteran trader Peter Brandt, a legend in the space, really summed it up well. He's looking at this little price bounce and he's basically calling it market noise. A classic dead cat bounce. He thinks it's a fake out before the real pain continues.
But wait, it gets even weirder. So on top of all that fundamental fear, there's a technical signal flashing right now that has literally never happened before. And the wild part is, the experts are looking at the exact same signal and drawing completely opposite conclusions.
So to get what's happening, you have to understand Bollinger Bands. In simple terms, they're a tool that measures how wild or how calm the market is. When those bands get super tight, when they squeeze, it's like a coiled spring. It means a massive, explosive price move is coming. The only problem, it doesn't tell you which direction.
And well, that is exactly what we're seeing. Right now, the Bollinger Bands on the Bitcoin versus gold chart have never, ever in the history of this asset been this tight. We are in completely uncharted territory, and everyone agrees a violent move is right around the corner.
So, which way is it gonna break? You've got analyst Tony Severino looking at this and saying it's setting up a major crash for Bitcoin. But then Stacy Muir sees the exact same chart and says, no, this is a super rare event that means Bitcoin is an incredible bargain right now. It's a perfect split.
Okay, so that's the doom and gloom. That's the fear. But on the other side of this tug-of-war, a completely different story is playing out. While retail traders are biting their nails, the absolute giants of the financial world, they seem to be quietly making their move.
Grayscale, one of the biggest players in crypto, is coming out and directly challenging the bears. They're basically saying, hey everyone, calm down. This 25% drop, it's totally normal for a bull market. The underlying structure is still incredibly strong.
And we're seeing the proof. It's like dominoes falling. First, the investment giant Vanguard, who is famously anti-crypto, completely reversed its position. Then, Bank of America gave its advisors the green light. And now, you're seeing a flood of new products coming to market. The institutional floodgates are creaking open.
And just think about the scale here for a second. The Vanguard news alone is massive. We're not talking about a small change. We are talking about 50 million brokerage clients. 50 million who suddenly have a doorway into crypto. The potential amount of money that could flow in is just immense.
And now look at this. This isn't some fringe newsletter. This is Bank of America, one of the biggest banks on the planet, formally telling its clients that putting a small slice of their portfolio, maybe 1 to 4%, into crypto might be a smart move. This is a massive step toward mainstream acceptance.
So you see the picture, right? We have these two incredibly powerful, opposing forces just slamming into each other. The market is truly at a crossroads, and honestly, this tension feels like it's about to snap. The next couple of weeks are going to be absolutely critical.
So get your calendars out, because these are the dates you need to watch.
December 9th and 10th, you've got the U.S. Federal Reserve meeting. Then on the 18th and 19th, it's the Bank of Japan. Their decisions on interest rates could be the spark that finally breaks the stalemate one way or the other.
So let's just boil it all down, side by side. You've got the bears, who are terrified of rising interest rates, that MicroStrategy selling pressure, and those spooky technical signals. And then you have the bulls, betting it all on institutional adoption, a strong market structure, and those very rare, very bullish statistical signals.
It really all comes down to this classic question, doesn't it? What happens when an unstoppable force, in this case, institutional adoption, meets an immovable object, which is all this macroeconomic fear? The $80,000 question is, which one is going to break first? I guess we're all about to find out.